Are short-term rentals dead? So based on what you saw from the thumbnail or the title of this video, let's go over whether or not short-term rentals really are dead in 2025, or do they still have a chance of surviving? So let's just dive right into it and let's see where we stand today. So again, everyone's asking the same thing. Are short-term rentals dead? You've seen it in the headlines, talks of bans, flooded inventory, landlord offloading properties, and the number of foreclosures in vacation markets. And in this video, we're going to break down what's actually happening in 2025 with real data. So let's talk inventory levels, demand trends, foreclosure numbers, regulation, and where this market is headed next. And whether you're an investor, operator, or just curious about what's happening with Airbnbs, this is going to give you a clear picture of where we're at and what comes next. So just to quickly introduce myself, I manage and own a real estate fund. I've closed over 250 plus transactions myself, and collectively with my partners, we've completed over 1,000 plus deals in the last decade. And what I share with you with my YouTube channel and in all my videos comes straight from my experience and analysis, and it's not theory. However, in this, I'm going to be fully transparent and let you know that I've never operated or owned short-term rentals. Many of the reasons are going to be shown in this video right here. However, I do know people who have gone into the short-term rental space that got into it quite early on that do well too. So not saying that short-term rentals cannot work, but let's go over the numbers and we'll go ahead and go over why I never got into the short-term rental space. But let's just dive right in. So the 2025 market overview. So as of Q2, quarter two of 2025, the US has approximately 1.76 million active short-term rental listings, which is about 5% year over from last year. And last year in 2024, I believe there was 1.68 million or so short-term rental listings. So it has increased since then. And demand has continued to rise, but more slowly than it has been before. Like, for example, in COVID times and whatnot, we're tracking more closely to about 4.1% growth year over year. You'll see the data for the 2020, 2021 years, and you'll see how big of a difference it is. But regardless, demand has continued to rise slowly. And occupancy rates in 2025 are holding around 54 to 54.2%, which is consistent with 2024, but it's down from 2021 highs, which were around 61%. And that's because of more competition in the marketplace as more listings come on. And if the demand does plateau and doesn't grow, then that means that more short-term rental owners are going to be competing with less demand. So that's always not going to be nice for these short-term rental operators. So let's go through what the average daily rates look like now. So average daily rates have remained flat or declined slightly in competitive markets, which obviously is not good news. Long-term rentals, on the other hand, the rents have increased year over year, and in some markets increased significantly. And so if daily rates have remained flat or declined, it will hurt these short-term rental owners and operators as they continue to compete more and more so with other listings and compete for the demand that's in place. And so in conclusion, inventory is still increasing, but revenue per listing is stabilizing or declining in some areas, which if you do own short-term rentals or you operate them, that's not something you want to see. And the market is becoming more competitive and operationally demanding. That's just the way that it is for short-term rental owners. Nothing to sugarcoat there. It's just what it is. And let's move on to the regulatory pressures and bans. So in Beverly Hills, California, for example, short-term rentals have been banned citywide in July 2025 and requires a minimum 6 to 12-month lease depending on the building type. And it's not just Beverly Hills. There's plenty of other cities around the US, and not only in the US, but many parts around the world. Spain also put a major ban on short-term rentals recently as well, which you can read about. And it's not just, again, in the US, it's in many parts of the world for many different reasons, which we're going to go into a little bit more here as well. Maui County short-term rentals were phased out in West Maui by 2028, and broader county ban by 2030. It impacts about 21% of the housing stock, and 328 short-term rental related bills are active across U.S. legislatures in 2025, with at least 66 expected to pass, which is a ton. So if all those 66 pass, it's just going to get harder and harder for people to run short-term rentals, and regulatory sentiment is trending restrictive. Plus, the people who are lobbying these short-term rental related bills are going to be your major hotels and whatnot, because you're also competing with the demand for those hotels. And so they obviously don't want short-term rentals to be out there and easy for people to actually operate, as it takes demand away from their hotels. So that is also a major competitor that you're essentially going against as well. And in terms of market dynamics, rising property taxes and insurance premiums are shrinking profit margins for Airbnb investors, short-term rental owners, and operators. It's Short-term rentals also are increasingly blamed for local housing affordability issues, which is prompting the policy change as well. And that is for a good reason. When there are single family homes were essentially built for homeowners or renters. And so if you take that inventory out and provide it to people who are just going to stay for a short while, for short-term renters, for vacation, then you're essentially taking that inventory out for the people who either wanted to buy that property to live in or wanted to rent. And so as you take that inventory away, it obviously does become an issue. And unlike hotels or motels that were built with the purpose of these short-term stays, these homes weren't built for that. And it obviously takes up a lot of land space as well. Single family homes were only meant for one family to stay in. And whereas hotels, you can fit maybe 30, 40, 50 families, depending on how big the hotels are, into just one building. And it doesn't take as much space as if you were to house 50 households in 50 different single family homes. The acreage that you'll take compared to what a hotel would on these short-term rentals also is a huge discrepancy. So that's something to think about as well. It's not the only issue for affordability issues, the housing affordability issue, of course, but it does play a part in it too, which I completely understand. And 76% of hosts report higher competition, and 55% cite saturation as a major challenge. Again, with more and more listing, it is bound to happen. And supply growth is beginning to really outpace demand in some of these markets, which make it really, really difficult. And investors and hosts without differentiation are going to struggle the most. It is what it is. So, is 2025 short-term rental market dead, or is it evolving? Let's go over it. So here is what I think. It is, in order to stay resilient, properties with professional operations, unique offerings, and strong branding needs to happen. Otherwise, it's going to be very, very difficult. So those who are able to combat and continue with that, they're going to be able to continue to perform. They're still going to need to heavily, heavily market themselves and heavily make sure that they are standing out from the crowd, on top of being in areas where there are less bans and restrictions. That is always, always harder because you can't always control that. So locations with stable regulation and tourism demand are going to remain viable. However, those are things that really aren't in control of, or aren't things that a short-term rental owner and operator can have control over. So that makes it really difficult to plan as well. Those who are going to be under pressure are people who own properties in restricted zones or have saturated tourist towns or high cost markets. And with daily rates not going up or being stagnant and occupancy starting to come down, if you are in a high cost market where your property taxes and insurance are going up year over year and your daily rates aren't, at the end, you're not going to be able to make money. And so what most people are going to do is either sell those properties or maybe go into foreclosure if they can't make their mortgage payments, because this is the only exit vehicle that they had. And in those unfortunate circumstances, it might be very, very difficult for these short-term rentals and operators to perform in. And so a lot of part-time hosts most likely are going to exit the market, because the only ones that are going to be really able to fight in this competitive space are the ones who are doing it full time. Otherwise, you're just not going to be able to compete. And those with heavy and more well capitalized operators are going to do better as well, of course. So here's what the future might look like. Short-term rental inventory growth is expected to slow or plateau by 2026. It is what it is. Regulatory environments will tighten further in major metros and vacation hubs. We're not seeing a slowdown on that at all. And hosts who leverage tech or offer long-term hybrid models, maybe they do a midterm rental and pivot. Maybe they change their property into co-living or assisted living facilities. They might have a chance, but they're most likely going to have to pivot into something else, especially if regulations do come down heavy in the city that they operate their short-term rentals in. Or they're going to have to reinvest in, properties, in different types of properties and different strategies. So those who can pivot will continue to win. However, the short-term rental as a strategy itself is going to just get harder and harder. I wouldn't say it's necessarily dead, but it is harder than ever to operate. So let's just go ahead and see what the inventory and occupancy comparison has been since 2020 all the way up to 2025. So you can see here in year 2020, there were 1.2 million active listings, 58% occupancy rates, and in 2022, or 2021, 1.4 million active listings, so 200,000 more, 61% occupancy rates, so much higher occupancy rates there, and that's the highest it's seen over the years. 1.55 million, 57% occupancy rates, 1.67 million, 54.3%, and then 1.76 million listings in 2025 with 54% to 55% occupancy rates. So in terms of occupancy rates, it's been just around the same in 2024 and 2025. If anything, 2025 seems a little bit better. It's still quite plateaued from 2024. However, the listings have continued to go up. But again, with declining or steady occupancy rates, if the demand cannot keep up and if the occupancy rates are not increasing and the demand isn't increasing to match the amount of listings that have been increasing, that will obviously hurt many of the operators out there. So in short, short-term rentals aren't dead, but 2025 is going to be a clear turning point for a lot of people out there. Inventory continues to rise, profitability is under pressure, regulation is accelerating, and winners are going to shift towards experienced and operationally sound hosts. So if this video helped you assess your short-term rental viability in your market, hit like and subscribe. Share your local short-term rental trends. Have you seen saturation bands or tourism bounce back where you are? Would love to know and hope to see you on the next video. Thank you.